Thank you. The gentlewoman from Massachusetts, Ms. Pressley, who is also the Vice Chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thank you, Madam Chair. When we say Black Lives Matter, that must also mean that Black communities matter, Black businesses, Black homes, and Black wealth matters. And yet, the systemic devaluation of Black communities and homes adds up to around $156 billion in lost equity. Equity that could have been invested in education and starting a small business or as a buffer during financial hardship. 97% of appraisers are white and almost 70% are men. And while lack of diversity in the field and individual biases undoubtedly contribute to the discrimination Black people face, the widespread undervaluations of Black homes points to a more systemic issue concerning how we appraise homes and the industry writ large. Ms. Rice, homes in Black neighborhoods are valued 23% less on average than those in comparable white neighborhoods, despite similar characteristics and amenities. The average homeowner in a Black neighborhood loses $48,000 per home due to appraisal bias. Don't you agree that this indicates a wider issue of systemic racism in the appraisal industry?
Yes, I do. There's definitely a systemic problem.
Thank you. So we cannot separate the rampant appraisal bias against Black homeowners from our nation's history of segregation and redlining. When establishing a property's value, appraisers use comparable sales of similar properties in that neighborhood. However, they often select lower value comparable sales in Black and minority neighborhoods, leading to undervalued appraisals. Ms. Rice, even if appraisers use appropriate comparable sales, can you tell us how historical discriminatory practices such as redlining are baked into current property values, perpetuating the impact of past discrimination today?
Well, what redlining does, thank you first of all, Congresswoman Pressley, for the question. What redlining does, both lending redlining and insurance redlining does, is it causes a restriction of competition in the market. So you have a decreased number of transactions, you have a decreased number of players in those communities, and some of those communities don't have access to lending or insurance products at all. And so when you rob a community of competition, you're automatically deflating valuations in those communities because you're not supporting the demand that otherwise could be there.
And building upon that, Ms. Rice, how do these compounding effects of low appraisals in a community, how do they dampen home values in that neighborhood, reducing the realized wealth of all homeowners who live there?
Right, well, because the way that appraisals are done in the residential space, the sales comparison approach, in order to assess the property value for your subject property, you've got to rely on values of adjacent properties in that community where the subject property is located. And so if all of the values, or if even some of the values of those properties upon which you're relying for your comparables are deflated, are artificially deflated, that is going to result in a deflation of the value for your subject property.
Thank you, and I yield.
Is it all right if I mention one thing, because I'm very familiar with the Orange Mound community in Tennessee? Is that all right if I address it?
Yes, please, go ahead.
Yeah, so first of all, the Orange Mound community has suffered from decades and decades and decades of redlining practices and discrimination. That community has always had a hyper concentration of subprime mortgage lenders operating in that community. So Orange Mound wasn't subjected to subprime lenders in 2004 or 2005 or 2006. It's always been, just as most communities of color throughout the United States, it's always been subjected to a hyper concentration of subprime lenders in those communities that utilize abusive lending products that drive consumers into foreclosure. So it's nothing to do with government policies or federal policies or anything like that. It was all market-based, and it was all private sector market-based abusive practices that caused hyper foreclosures in the Orange Mound neighborhood and ultimately distressed property sales in that community.
Thank you. The gentlelady yields back.